Hey everyone, welcome back. Let's do a quick sound check and we can get started for tonight. Hope everyone is doing well. Been a crazy July. What is this, the 4th week of July? We're going to be ending the month soon. Okay, audio seems to be good on my side, but let me know if there's any issues. And while we wait for others to join in, we are going to talk about news trading. Obviously, this is supposed to be part 2. This was supposed to be on the session before the CPI numbers, but it's okay. We got the NFP done for this month. We got the CPI done for this month. So a little bit peace and quiet this week in terms of the news side of things, but there's still going to be stuff that we can take a look at. All right, so this is going to be a theory and practice. My name is Zero Injara. Let's get this started with a quick disclaimer. Any opinion, news, research, prices, or analysis or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and does not constitute investment advice. So this is a general advice and it's not a personal advice. All right. All right. Obviously, there's going to be bonuses for participants, right? You're going to get your promo code to double your deposit bonus at the end of the session. So yeah, we will share that code once we're done with the presentation, and then you should have your access to your private Telegram channel if you registered through email. If not, then please contact the customer service and they should be able to direct you if you need to sign up for future webinars and stuff like that. But yeah, you should already have that invite by now. Okay, so what are we going to talk about tonight? We're going to take a look at the advantages and disadvantages of news trading, some of the most profitable news for trading. Obviously, we're going to talk about news trading and the price action that follows after that, general rules for news trading, and then we want to focus on the buy stop and the sell stop strategy. All right, this is what we call the straddle strategy, and this is something that we actually employed during the NFP numbers and also during the CPI. And then we can also take a look at the buy limit and the sell limit strategy. Obviously, this is a separate unique use case scenario. I think we could show you an example of that for tonight. But yeah, just want to get you guys into the rhythm of doing the stop orders correctly. The limit orders and the stop orders correctly, because if you do it wrong, then obviously that's going to cost you the trade, right? Because you might have the wrong perception. So we want to practice that on the MT4 trading platform for tonight. All right. So let's discuss the advantages first, because I think there's a lot of advantages and there are obviously a couple of disadvantages as well, and I'm going to be a bit harsh on these disadvantages as well, but we'll cover more on the advantages first. All the necessary information can actually be found in the economic calendars, right? So there's no need to delve deeply into the technical and fundamental analysis. Now, this is news trading. Don't get it mixed up with fundamental analysis. All right, fundamental analysis is a completely different thing. It takes much more than just news trading, right? When we talk about the context of news trading, it is typically, in this case, it's more on trading the reaction after the news. How should you navigate the market during news releases? That's trading the news, right? But when we talk about news, obviously it comes with the fundamental aspect of trading, and that's separate. That's going to be fundamental analysis. It takes a higher level of discipline to be able to understand fundamental analysis, and there's a lot going on in fundamental analysis. If you have an understanding of economy, that's great, but it's not a necessary thing. But again, if we compare news trading to fundamental analysis, they're two different things. And obviously, when it comes to news trading, you don't need to have that knowledge of that deeper understanding of technical and fundamental analysis. All right. The other advantages to me, I think, is that the events and calendars are actually ranked in order of importance, and it does help to make adequate decisions. What it's trying to say here is that we can rank how impactful the news is going to be, right? So for example, we're going to get I believe we're going to get the housing data for the US from the US tonight in about half an hour's time. This has a very different impact to, let's say, the NFP numbers or the CPI numbers, right? We're talking about a totally different thing. inflation and the employment numbers are obviously going to come first place, especially right now when we talk about the inflation that's been going on around the world. But it does differ. At times we look at different things, and depending on the situation, we look at certain aspects of the data in a different way. Okay. For example, the housing data used to be very important, especially during the subprime mortgage crisis, during the 2008 global financial crisis. It was an important number to look at because we've got basically the economy collapsing. People are finding it hard to buy properties. So any recovery in the real estate market does kind of reflects on how well an economy does as well. But we're not gonna put them in the same rank as the CPI and the NFP numbers. They're going to always rank a little bit lower, even though they're categorized as high impact numbers. But we look at different categories, throughout, right? So publication of statistical reports noticeably increases the volatility. This is true, and traders can earn large sums on it, and also lose large sums on it. So I'm just going to add something onto it, right? The thought is that for a beginner to jump into news trading is that, oh yeah, it's easy to make profit out of it. It's not. So I'll just be fair, and I'll be a little bit harsh on this one here. But the reality of things is it's gonna earn you a lot if you get it right. But if you get it wrong, it will cost you a lot as well. So with any good returns, there's always going to be a high risk in the market as well. And when it comes to news trading, it does help if you have that fundamental or technical analysis knowledge, right? It helps a lot, right? I'm looking at, if you don't know anything about the technical side of things, if you don't know anything about the fundamental side of things, then news trading, it's probably going to give you about 50-50 probability, right? But if you understand a lot more about the fundamental and technical, you understand the context of how important that the data that you're monitoring is going to be, it's going to increase your chance, right? It might increase it by 10-20%, I don't know, but it will increase the chance, okay? So it will increase the volatility. It could, at the same time, sap away liquidity in the market. So there's always the other side of the coin, okay? But in terms of the advantages, I think the simplicity of the strategy for this one here, this one is true. You don't actually have to learn complex mathematical formulas. You don't need to learn complex mathematical formulas or to draw the most complicated shapes on the chart. You just need to be able to make that trade and close it. And this is something that we... the purpose of doing this news trading webinar is actually to show you that I'm not deploying any of the technical skills or that I have, right? I'm not deploying that. I'm giving you the context of the information throughout the webinar before the numbers get released, or before the CPI numbers, before the NFP numbers. I kind of give you the estimate, what the market is looking for, the different scenarios and stuff like that. So that's part of the equation. Is the reason why we're doing this webinars, right? The news trading webinars are actually to help you contextualize what's going on in the market, okay? But never, not once, in any of the live webinars that we've done for the CPI and the NFP numbers, that I deploy any of the technical knowledge that I have, right? I use Ichimoku Kinko Hyo, I use Fibonacci, RSI stochastics. I don't actually deploy that. We're practically just looking at price reaction to the numbers, and that's basically what we want to talk about when we're discussing this news trading session, okay? With that, obviously, there's going to be minimal time expenditure on your trading. You know exactly when to go to the trading platform, and you know what to do. And, best of all, the trading process itself, it's only a few minutes, right? Like the CPI and the NFP numbers, I can talk and explain to you guys about the CPI, the NFP, whatever it is, and I only need about 5 minutes to set up the orders and stuff like that, and then just let it go. Okay, so this one here, when we talk about minimal time that you spend on trading, is that you don't actually have to be there in front of your computer or your phone all the time. If you know when this data is going to get released, then obviously you know when you should be in front of your computer and get things ready. Typically maybe about half an hour before the whole thing happened. But if you come in last minute, you got 5 minutes to go and you can still make that trade, yeah, you can still make that trade, and I think that's the whole purpose of why we explain this straddle strategy and stuff like that, just to go through with the NFP session. All right. Now let's talk about the disadvantages. I'm actually going to add a little bit more onto this. Okay, not always that it's not always that the market situation develops the way logical thinking and common sense predicts. If we get a good number for the U.S., it doesn't always go the right way. Okay. Good thing about the CPI this month, it was okay, right? We've got a lower than expected number from the CPI side of things. We know that if that's the case, then we already have a setup scenario where the US dollar is actually going to weaken a lot more. And that's basically what happened the past week following the CPI numbers. We saw the US dollar weakening. But that's, something that kind of makes sense, right? But on other instances, a good thing is not necessarily the best thing. All right. For example, I can give you the situation on the sterling right now for today. The sterling, we had the inflation number on the sterling, and we saw that drop because everything is also below the consensus. Logically thinking, the inflation is still high. It's still really, really high. We're talking about 7-8% here on the UK inflation, right? So that drop means anything significant? I think so, yes, but we can't just take it on face value that it should deteriorate the sterling. But what we got with the sterling is that, sure, it's dropping down really, really quickly. But if we take a look at the underlying situation on the sterling, is that it's far off from being a trend reversal or anything like that. So that needs to be considered as well, because we got that news releases, but in like an hour or so, things could change, right? So it doesn't always mean that bad news is bad for the currency. It's good if we get it the way it is. But sometimes if we get a bad number, it typically might reflect something that could actually strengthen the currency itself. So different case scenario. It doesn't apply every single time the news gets released. As I gave out the example on the CPI and the past NFP numbers, is that even though we have the same number, right? But if we take a look at historical changes, for example, in May and in June that we showed during the CPI session, and if you missed out on that session, I think it's a good thing if you can go back to that session, because with the CPI session is that everything that happened in May and in June is exactly the same scenario, where we have the headline inflation that drops down, and then we have the core inflation that just comes out as per consensus, and the damage to the market is different in May and in June, right? In May, it actually strengthens the US dollar. In June, it weakens the US dollar. So different contexts can give you different things as well. And sometimes it's not rational. Sometimes it's a little bit illogical as well. Okay. Not all news can cause any reaction at all. For example, the what's that news for today? The US building permits number and the housing starts number that's going to get released in 15 minutes time. That might not have an impact onto the market, because the market is probably waiting for something else. Okay, tomorrow's initial jobless claims, the weekly jobless claims, that's going to have a much bigger impact than the U.S. housing numbers, even though the weekly jobless claims is categorized as a medium impact news, but it will have a much bigger impact in the market, because in the context of the U.S. economy, I think the market is looking for any signs of the employment sector to kind of cool down, the employment data to actually kind of fall back down a little bit, so that the FOMC might use that and say, hey, yeah, you know what, we need to stop hiking interest rate and stuff like that. So we're looking at different scenarios. Okay, now the third point is that if you don't guess the direction or even analyze the situation correctly, you may experience a significant loss. So this is what I'm trying to say. While it's simple to trade the news by logic, right? You just need to know when to show up in front of your computer, how to set up the orders and stuff like that. But if you analyze it incorrectly by means of fundamental or technical, you might cause a lot of damage as well. Okay, so this is a situation where it's easy to earn a lot of money if you get it right, but it's also very easy to learn to lose a lot of money as well if you get it wrong. Okay, so I'm not in the I'm not to trade. I don't trade by guessing. So, I don't like the word guessing the direction, because I'm not here to guess the direction. I'm here to analyze and figure out what the market is doing. I just need to do that a lot better just before the news happen. Okay, so if I can make changes to this, I probably wouldn't say don't guess, because I don't really want you guys to guess. I just need you guys to have a little bit more conviction rather than just guessing the direction of the market, because I don't think that's how trading should be viewed. In terms of trading, you should understand the context of what price is doing right now, what the economy is doing, in relation to charts. Is there any importance to any levels in the market at this point in time? Okay. So those are the advantages and the disadvantages. I think if we want to go on a little bit more on the disadvantages, we can do that. But in terms of the advantages, I think this is just that. All right. Maybe I'll add one more on the disadvantages. When we talk about higher volatility, we typically get a lower liquidity as well. And what does this mean? During news releases, high impact news releases like the CPI and the NFP numbers, you might get a wider spread, right? Your typical spread may be about 0 point something to about maybe 1.5 for, let's say, the euro. And during news releases, it might actually spread out a little bit. It might be 6, 7. And if you get in during news releases, there are a few scenarios that could happen. You could get typically it doesn't happen very often, but you might get what we call a slippage, where your orders doesn't get filled and it gets filled at a much lower or higher level, which is not necessarily the best case scenario, right? And the other thing is the spread could widen. Spread is obviously the cost of your trading. If you open a position on normal market condition, the spread could only be about 1 pip. But during news releases, maybe it'll cost you 6 pips to just open that one trade. So you need to factor that in as well into your trading. All right. Okay, so let's take a look at the most profitable news for trading. With any news, when it comes to news trading, it's always categorized into two categories. We have one that is kind of hot or unexpected. This includes terrorist attacks, military conflicts, natural disasters. At any given moment, right, national currency could become stronger as investors get rid of stocks which are about to fall, or it might impact the oil as well, for example, or gold as a safe haven, depending on what you're looking at. But this kind of news is it's unpredictable. We might see signs of it. For example, with COVID, there were signs of COVID happening. And in fact, there's a lot of research being done that, there's going to be a super flu that's likely going to come back again. And there's actually a lot of documentaries being shown in between 2017 to 2019. I remember watching one before COVID, and I believe Bill Gates was the one that does the doco. So there are things that we can kind of anticipate, right? Ukraine, Russia, for example, we kind of anticipate it, right? But we don't know how fast it will escalate. All right. For example, with COVID, we know there's going to be a super flu coming, but we don't know the impact onto the market, and we don't know that is actually going to stop the world. Basically, every economy was pretty much shut down for about 1 month to 3 months. We don't know the impact to that, and up until now, I don't think we are actually back to normal yet. It brings out a lot of changes. For example, people are not looking forward to coming back to work in the office physically. They're so used to working from anywhere or working from home that it's very hard to kind of make that change, right? In fact, I think right now there's a lot of talks about people actually not wanting to go back to work in the office, and they're calling it unfair. And obviously this changes the dynamics on how we spend, how we earn, how we perceive value in the market. Obviously this is something that cannot be anticipated. We can anticipate it, but we cannot actually measure it. We cannot really predict how things are going to be. Okay, so this hot unexpected news are things like that. Okay, if a terrorist attack happened, let's say, I don't know where it is, but let's say in one of the major cities, we don't know how that terrorist attack is actually going to have an impact into the market. I can give you one example that I experienced myself. That was during the tsunami in Japan. It escalated really quickly, right? We were trading it as normal, but something happened with the Japanese yen, right? With a lot of helps coming into Japan for the tsunami, every donation is going to get converted into Japanese yen, and it goes back to Japan. So this is what we call a repatriation. It boosted up the Japanese yen significantly in a very short period of time. So yeah, that happened. And then during the global financial crisis, there's a carry trade unwinding that happened, and it actually causes a huge chunk of the market. And up until now, if you don't experience that, and if you don't understand carry trade, for example, you wouldn't actually kind of figure that out as the trigger of the global financial crisis. So are we in the precipice of that at this point in time? We could be. So I'm just giving you a warning right now. I can't tell you what it is, but we might actually be experiencing some sort of situation like a carry trade unwinding developing maybe in the next year or so. Okay. Then the other one that you can focus on is the periodic news. This is something that comes out regularly, and the quarterly reports of the companies and everything that goes along with it. So depending on what you trade, if you trade the equity market, then it's good to know when the earnings are going to get released. So if you trade Apple, if you have an investment in Apple, you want to know if they're doing well this quarter and what are their expectations for future quarters and stuff like that. These are your fundamentals, okay? But this falls under the periodic news as well. Periodic news also includes central bank meetings and monetary policy decisions. We've got 1, 2, 3 next week. I believe we have, I'm not sure if the ECB is actually going to be next week. I can confirm 2. We're actually going to have one on the 26th, which is the FOMC, and then on the 28th we have the Bank of Japan, right? So we know when they're going to be doing it, and we already know early reports on what to expect from those meetings anyway, all right? So we can, to a certain degree, anticipate a lot of this stuff, right? We know what the consensus is. For example, with the FOMC next week on the 26th, they are likely going to hike 25 basis points, and there's logical reasons behind that. They have already stated it, and we know that they're actually going to be doing that. Okay, so these are things that you can come into the market, get prepared, and you already know the expectation from the market. Okay, and obviously the foreign exchange market reacts to the central banks raising and lowering interest rate as well. So like for the FOMC, as I said, in the outlook this week, I think they mispriced something. I think the market is in a whole euphoria with the US inflation falling down, that they kind of anticipate that the FOMC does not need to hike interest rate, but they will hike interest rates. And I still think that they're actually going to be hiking one more rate, at least in 2023. But I think the market is kind of anticipating that, yeah, they'll raise in July and that's it for 2023. I don't think that's going to happen. But again, who am I to go against market expectation? All right. Then we have the quarterly GDP reports as well as the monthly GDP reports is also in there. We got inflation indices, the CPI, the PPI, and the core CPI as well. Right, index of business activity in manufacturing and services. These are the PMI manufacturing and services. Okay, it could be flash, it could be ISM. The US is going to be ISM. Everything else in the world is going to be the flash CPI PMI numbers. Okay, we've got the unemployment data. This is going to get released during the NFP session in the US at least. Right, we got our unemployment numbers, and we're basically looking at the employment sector, and we're looking at that data, and there's a lot of other data involved in it. We might take a look at wages. We might take a look at the non-farm changes, which is the NFP numbers. We might look at the unemployment numbers, okay? So these are stuff that you can find on the calendar. And if you can find it on the calendar, that means it's been a scheduled event, right? Even a speaking engagement, a speech, a press conference, that's also a scheduled event that we can somehow kind of trade, right? Okay, so let's take a look at price action at time of news releases. And if you want to look at the price movement, they can actually be divided into 3 main phases, which is a consolidation phase. And this is a phase that we need to anticipate for and identify as soon as we can before any news releases. Because before any news releases, typically people actually do not want to open new position as the news get released, before the news get released, closer to the news getting released. So with people not opening, people not buying and selling the market, will typically fall into the consolidation phase, right? The market's just going to go sideways because there's not enough buyers to push the market, there's not enough sellers to push the market. So it's kind of a market that awaits for something, okay? And then the news get released, and then that's going to be a development phase. The market goes in one direction, or maybe whipsaw it and then goes in one direction. But it's typically what we would consider to be the time where we actually enter a trade. And then the termination phase, where the market kind of just, okay, it might slow down a little bit. Everything has settled down, and that's why with the CPI releases and the NFP releases, we typically only trade the first 15 minutes to the first half an hour, and then we get off our position because we don't want to be stuck in the termination phase. Because during the termination phase, if you take a look at the chart here that we have, the graphics that we have, it's very similar to the consolidation phase. Okay, so termination phase could basically tells the market to just, you know what, there's people taking profits, people not wanting to get in the position into the positions yet because they can't figure out what the market is. So it's not going to be a lot of activity. So we just want to get in and out as soon as we can, and that's what it is. All right. So, several general news for news trading is that you need to study the market and the dynamics of a currency pair, study the reaction of a currency pair to the latest news, prepare for trading, mark the levels on the chart, decide on your strategy when you will open and close the order. Like for the NFP and the CPI numbers, I make that decisions to, have that orders get in before 5 minutes before the news get released, and then my goal is to get out within the first 50 minutes, and that's basically my goal, right? That's how I trade the CPI and the NFP numbers. Typically the CPI and the NFP numbers, I don't actually want to stay for a prolonged period of time, because for me to kind of figure out what the market is, analyze what the number is and stuff like that, it will take maybe a good 1 or 2 hours before I make my decision on longer term trades. All right. Choose a working time frame. Typically with niche trading, you really want to go for a lower time frame. I wouldn't go for anything higher than an hour. Typically, it's going to be about 50 minutes or 5-minute charts, right? Those are going to be your working time frames if you're trading the news. And you need to determine the maximum risk for a trade. You need to think about using stop losses or maybe trading stop loss if you want to stay in for a little bit longer. You also want to decide on the terms of the deal, right? As I said, will it be a quick trade or is it going to be a long-term one? Let's say more than an hour. My deal on any news trading is that I spend 5 minutes before the news, set up my orders. Orders get triggered, manage the orders. Within the first 15 minutes, if I'm allowed to get out, I'll get out. If not, within the first hour, I need to close out the whole trade. All right, so those are your general rules for news trading. And typically with news trading, we want to use several orders. This is something you need to kind of screenshot if you need to. It's actually very simple. If you want the price to, if you want to buy when price goes up, all right, if it breaks a certain resistance, then you want to use the buy stop orders. The opposite is true. If you want to do a sell, if the market breaks a certain range, you can do a sell stop orders. But think about it this way, the stop orders are basically the order that you want to if the market breaks through in the direction that you want the market to go. Okay, so if you want the market to go up and it breaks that resistance, then you do that buy stop order. If you want the market to go down and you want it to break support, then you want to have your sell stop. The sell limits is there for a different reason. The sell limit is orders placed above the current market price, and you want price to fall down. Okay, so that's going to be your sell limit. So you want price to go up first, right? Hit your order, and then you want the market to go down. That's when you do that sell limit. The buy limit is that if you anticipate a support to stay strong, you basically want to buy at support, and you create a buy limit orders just in case if it falls down there, it'll get you the order and you're anticipating the market to reverse on it. Okay, so these are two different set of orders, the stop orders and the limit orders, right? But sometimes it get complicated, but once we go into the practice, it should be pretty clear how to make that orders. Okay, so the buy stop and sell stop strategy is what I call the straddle strategy. This is something that we use during the CPI and NFP numbers. All right, so basically we identify a range and we want to create a buy stop and a sell stop. Okay, so a buy stop, if it hits the green line, you will have a buy order. You're gonna go long. You want to buy. You're gonna get a buy order. Okay, so you'll actually go long that trade. And if the market continues to go up, then you're gonna be in profit. Okay, sell stop is that if the market breaks that lower range or touches it, it will trigger a sell in your trading, and that's how sell stop and buy stop works. Okay, so let's say we've got the buy trade that hits the buy stop. So your buy stop is going to be there at 1.0950, and then the market is going to go up. Typically with this one here, you want to cancel the other orders, right? Because we have two orders. One gets triggered, and we need to cancel the other one. This is something that we do during the CPI and the NFP news, okay? But that's how simple it is. Your trade or your orders get hit, and the market goes up in your favor, and everything goes well. Okay, once it runs up, obviously you can do your, move your stop loss to break even. That way, there's no risk to that trade. You can let the trade run if you want to, because if the trade goes against you, it will just hit the stop loss, and you're not going to lose anything anyway. Okay. All right, let's practice with using the stop orders. There are several stop orders that can actually be employed right now. We've got the Euro USD, and there are several range that we need to identify with. Okay, if we take a look at the range in the Euro USD, we can identify the upper range at about 1.1240, and the lower range is actually going to be about 1.1195, right? It's actually 1.11. It's actually 1.12. All right, that's going to be the numbers. But let's say we're looking at Euro USD right now. It's kind of flat. It's within the range, but price needs to go somewhere anyway, because the US market just kicks off. As I say, with the housing data, it doesn't have an impact on the market because we're not looking at a crazy movement in the Euro USD, so we're not looking at any gains or anything like that. The market is just flat. So, excuse me. So we can just create a buy stop, right, at that level. I want to go a little bit higher. I want to have it at 1.1250. A little bit higher. So what I'm trying to say here is that if market goes up towards 1.1250, it will trigger a buy position. And the other one is because we anticipate, I don't know, things could go wrong. I want to have my sell stop a little bit lower, maybe about 1.1185. So just in case if the market goes down, it will hit a sell, and I'll be I'll be with the flow in the market. Okay. So that's how we look at, setting up stop orders, right? Or you can click on new orders. And you can have it, the type, we can have it pending order, right? You want to have a buy stop or sell stop. This one here, you can identify it at a much, clearer positioning if you want. For example, I'll have my stop loss, buy stop order at 1.1260, just a little bit higher. But at the same time, I can set up my stop loss as well. So, if you have everything planned out, your stop losses and stuff like that, then you can use the new order button if you want to. Otherwise, just right click on the chart and then just use the buy stop and sell stop. It's just a lot faster. Okay, so for example, I got my order here. I'm going to create my order. I want to have my stop loss at 1.1185. Right, and I want my take profit to be at, let's say, 1.13, and I can place it. I can set up an expiry. When does it expire? If the order doesn't get filled tomorrow, for example, I can set it here, right, by tomorrow. At the same time, if it doesn't get triggered, then it will cancel my order. So I can have that, and it's just there with everything, with stop loss and take profit and everything else. Okay, so that's one way to look at it. But I think the easiest way would be to just, create, just right click on the chart if you think there's a limit in the market. For example, the pound USD here, If it goes down below 1.2875, I want to sell the pound, because I think there's further weakness to the pound. And in the orders section, you can click it here. You can adjust your stop loss if you want to, but see how quickly I place my trade there. Like my orders is just right click and then do it, right? So let me just replicate this again. I want to sell stop. So if the market goes down, I want to be in with pound USD short. So I'll just right click on the chart, go to trading, and just create a sell stop. Doesn't matter where it is, because you can drag to modify, and that's how we do it to 1.2875, just about there. And then I can go here and fine tune it. I can go into the order down there on your trade terminal and just double click on the stop loss. I can modify the stop loss as well. All right. So I just type in my stop loss here, for example, because this is going to be a sell order. So I want to have my stop loss a little bit higher. So I'll just have it at 1.325 and 1.3025. And for my take profit, I think this one here is going to go down to 1.28, and I'm just modifying it and just click it, and that's it. It creates a barrier. Once the order is going to get triggered, then the stop loss and the take profit is going to be active. There's going to be a question from you guys, right? Do we have to stay online once the orders are entered? No. And I think this is why we have this different order types, because the whole purpose is that this will help you if you're not in front of your computer screen, that you cannot manually, click buy and sell. Okay. You can just set up your orders, let it go. Once the market goes there, your broker gets your order from your account anyway, so they'll trigger that trade for you. Okay, very simple. All right. So let's take a look at the buy limit and sell limit, because I think this is something that we can actually apply to the market today. You can look at the local previous high, and you think that's going to be a resistance going forward in the future. So if you think the market is going to go up, hit your order or hit that resistance and then come back down, then you want to create a sell limit order up at the top. Okay, so once it hits, it'll take your order and it'll go short just at that resistance as well. So this is a very unique use case scenario, right? Because you will need to know some sort of technical analysis. Otherwise, this is not going to be useful to you, because you will need to be able to identify a previous resistance, or you can use the previous high or previous low if you want to, but to a certain degree it takes a little bit of a technicality in doing a buy limit and a sell limit strategy, because you need to have some sort of understanding into the technical analysis. Otherwise, you do not use the limit strategy, right? Because it's going to be very, very risky. Okay, so let's practice, because I think there's a few scenarios that I can show you here. Okay, so let me bring up the chart here on TradingView just to give you an illustration of what we're talking about. So the pound USD here has actually reached the the third stop loss here. Now if we go on to the 15 minutes time frame on the pound USD, it's starting to pick up, right? But there's still going to be a problem with the pound USD. What if in the short run it goes all the way up to 1.3 and then get rejected? Because 1.3 is a very significant level where it was previously a resistance, and now it becomes previously a support, it becomes a resistance right now. Okay, or maybe a little bit higher, right? Maybe a little bit higher, maybe about 1.3015. Okay, but we'll take it at 1.3. So let's say I have this scenario where I anticipate the pound USD might go up to 1.3, and I want a longer term position on the pound USD. So I'm gonna clear this off a little bit. Okay, so I'm gonna go 1.3 and I'm going to go trading, and I want to create a sell limit because there's an option for a sell limit, right? It gives you the arrows anyway, right? It'll tell you whether it's a limit order or is it going to be a stop orders, because if you right click anywhere above price and the only sell button is actually a sell limit, so you actually just need to look at the arrows itself. So this one here, I'm going to create a sell limit, and I want to have my sell limit at about 1.3. Right, I want to have exactly 1.3, and I want to make some changes to the sell limit. Okay. Trading stop. No, I don't need my trading stop. I'm gonna do my stop loss first, and I'm just going to put in 1.3030, and my take profit is going to be at 1.28. That's how it is, right? So if the market goes up, I'm expecting the market to go up, hit my orders, and then come back down. See the difference here? It's going to give me a much better risk reward ratio compared to the stop order trade, right? Because if I were to do a stop order trade, my entry would be down here. All right, if I want the market to slide down further, my entry would be about 1.2875. And my stop loss would still be at the same level as this one. My take profit is going to be the same, but look at the difference here. It's huge, right? You can take a look at this one here. It's huge. That's how far it is, right? One is that you sell at the bottom. The other one is that you want the market to go up, pick up the order at the resistance, and then sell at the very top there, leaving you with a small stop loss and a much bigger profit target. So depending on the situation, you might want to flip and figure out which scenario is going to be better for you. So for the pound USD, I like my limit order a lot more. And for the dollar Japanese yen, I also like my limit orders a lot more, because if you take a look at the dollar Japanese yen here, and if you highlight the resistances and stuff like that, let me zoom out a little bit, show you. And if we highlight the resistances that we have on the market, it's going to fall basically about 139, right? So I'm anticipating if the market goes to 139, I don't think the market is actually going to go to 139 because I think we just hit a little bit of a support on the dollar Japanese yen. But just in case, if the market hits 139, right, I want to go long, and I want to create a buy limit a little bit lower. And because it's visual, I can figure out where to place it. Maybe I'll have it about 139.15. Or if I want to have it a little bit lower, a little bit safer, I'll have it about 139. Okay, so what it does mean is that if market goes to 139, if the market goes down, it'll create a buy order for me, and then it'll bounce up. Now, let me just give you an illustration. Okay. Over here, so you can kind of visualize what it is. Because MT4 doesn't allow me to visualize better on that. But what that limit order is doing is that I want price to go down. So basically, if I have a limit order at 139, that means I'm actually going to go long there and maybe have my stop loss just about there and have my target way up there. Okay? Way up there, I don't know, because this is the dollar Japanese yen, right? So I can have that. So I want the market to go down, pick up my orders, and then it bounces back up. Or I have the other side of the equation. If I want to use a stop orders, for example, right? Maybe I'll go long there, and my stop loss is going to be there, right? For example, and my take profit is there. You see the difference? One is that you're going to have about 2-to-1 risk reward ratio. So you're going to have double the risk, 1 time the reward. The other one is that you're going to have 1-to-4 risk reward ratio. So for 39 pips in the market you're risking, your actual gain is going to be about 180. So this is more on strategy rather than anything else if you're going to be using the limit orders. Okay, so be mindful of that. Okay. So obviously there's going to be some sample strategies on the limit orders if you want to, but you can take a look at trading after the news releases. So what it's trying to tell you is that you don't actually have to trade exactly at the news release. And this is something that I personally do. I don't actually trade the news releases unless it's CPI or the NFP and when I'm doing it with you guys. But personally, on my bigger accounts, I don't do that, right? On my bigger accounts, I kind of figure out what the market is, what the data is, how does it all fit into the market, how does it fit into the whole bigger picture, and then I will actually trade the news after the release. So with the CPI and the NFP numbers, I don't actually trade the NFP on the Friday, and with the CPI, I don't actually trade it until the Fridays. Okay, so I'll give it about a day or two because things can change, and sometimes I'll have to wait a little bit longer. But that's really dependent on what kind of trader you are. If you're a scalper, obviously it doesn't matter. Okay, you can trade before, after, at the news releases. But for a swing trader like me, we need to get the whole bigger picture. So we typically wait until after the news get released before we actually open the position. All right, so News trading, you can do it at news releases with that sell orders, or you can do it after with the limit orders. It really depends on your preference. But the sell stop, buy stop, sell limit and the buy limit, you can use it however you want, before or after the news releases. It doesn't matter, because it just comes down to what kind of strategy you have on how to deal with the news releases. Okay, all right, let's do a quick test before we go into the Q&A session. All news can be divided into two categories. What are they? If you can type it in, that'll be great. So it means you're following this session and you're paying attention. All news can be divided into two categories. What are they? All right. I'll take in any answers that I can understand on that one. All right. The other one is, what type of orders is most often used in news trading? And I mentioned this a lot of times already. What are the type of orders that are most often used in news trading? And the last one is this one here is a little bit out of the webinar topic, but can you use ordinary indicators to trade the news? Okay, so those are going to be your three questions. If you can answer that, that'll be great. While I'll go through the chat and see if there's any questions and stuff. Anyone following using the straddle strategy? If you want to have a good understanding of how we use the straddle strategy, if you can look at the webinars that we have on the NFP, which is on the 7th of July, and the previous one on the CPI, which is on the 12th of July, we employed the straddle strategy pretty much throughout those sessions, and that's how we use the straddle strategy. Profit Edge AI, I don't know what Profit Edge AI is. I'm sorry, so I can't actually answer that. Do you think it's the best way to learn how the market reacts is through certain big news? Not necessarily. I think it would be a good introduction to a lot of people when it comes to trading, that, yeah, their experience with a volatile market is probably due to a certain news in the market. But is that the best way to learn how the market react? If you're learning, I would say stay away and look at how it moves, right? Once you figure it out, you can do your back test. So you can actually go to every month of you can go to the previous month. You can actually go back to the exact time of the data being released and see how the market react to it. So you can do that instead of having to trade live every month or say, without understanding what it is. So I don't think that's the best way to understand it. All right, housing start. Nothing is happening with the housing start. We've got the housing start number. We got the building permits number is actually 1.44 million. Consensus was 1.49, so we actually have a little bit of a drop, but it's okay. See, that drop doesn't cause a lot of ripple in the market. We got housing starts dropping down to -8% month on month. The housing starts for the year drops down from 1.559 million to 1.434 million. Doesn't cause a ripple because it doesn't have any significance to what it is. Hot and periodic, emergency and scheduled, yes. And hot and periodic, yep. Okay, go. So only 3 people are answering this. Okay, it's hot and periodic. That's right. So it can also be emergency or scheduled. It doesn't matter. It's the same thing, right? What type of orders is most often used in news trading? It's the limit and stop orders, but the most used orders are going to be your stop orders, because a lot of people are just going to trade the news with a straddle because they want to figure out the distribution phase, the accumulation phase, and stuff like that. But that's how it is. Can you use ordinary indicators to trade the news? And the answer, one says yes, the other one says no. The answer is obviously yes. You can use anything to trade the news, right? Obviously, traditional indicators also going to apply to the market, but so it would be a yes. So I'm getting confused here. Why would anyone say no? Yes, it will be helpful if you understand the other indicators that you have. For example, before news releases, you understand the situation in the market. Is it overbought, oversold? What's the RSI? What's the stochastics? Right? If you use other charting tools, for example, the Fibonacci, you can look at certain levels. There's going to be a resistance. There's going to be a support. Yeah. Any knowledge that you have, from a technical standpoint or fundamental standpoint, that's going to help with news trading. So don't limit yourself, because if you limit yourself, then I think you're not giving yourself a much better probability to be in the right side of things. Otherwise, if you're just guessing around, I wouldn't suggest that's the best way to trade. I don't like guessing. I really want to take guessing out of the equation. I want to make everything to a certain degree calculated, right? So I don't like the emotion that I have to guess whether I'm right or whether I'm wrong. Just don't do that. And ideally, if you want to get serious when it comes to trading, we provide a lot of webinars that talk about all the technical stuff, the fundamentals, the psychology, risk management, everything and whatnot. In fact, we actually have a series on that we just run last year. Basically the last quarter of last year, we actually spent 3 months conducting that webinar. So if you want to go to AltaFX YouTube channel, you can learn about all this stuff, from the beginners level all the way up to about intermediate level. So yeah, you can use ordinary indicators. In fact, we're not even explaining about indicators in news trading, right? We're just looking at price actions. But yeah, you're welcome to use any indicators, because anything that can help you try and figure out what the market is, then I think that's going to help out. Gold next level. Okay, stop order does not trigger what I experienced with Octa in news event. No, I think there are certain cases like this, and I believe the last case of that I know of, because I'm not sure, I'm not handling the English side, but the Indonesian one, I think there was an order that wasn't triggered, and the reason is the guy doesn't have enough equity to trigger that order. So just look at your equity as well, the order size, the lot size as well, because I don't think I actually managed to talk about the lot size. But yeah, if you right click or you modify your orders, you can actually adjust the lot size. Sorry, modify order. Yep. Right. So you need to adjust your lot size up here. It says to 1, and you might want to bring it down to, let's say, 0.1, for example, if you want to go for a micro lot or a mini lot. 0.1 is a mini lot, 0.01 is a micro lot, right? So if you want to have that order change, for example, I want to have a buy stop at 0.01, just make sure you change it over there. Or if you don't have this button, because by default it's actually not there, is it Alt T? Yeah, by default you're not gonna have that. If you want to have it up there, it's Alt T. But if you click on the new order or F9, on that new order you can change the volume. So I want to have it at 0.01. Make sure I have it there. Market execution pending order, I want to have it at a buy stop. For example, I want to have it at 140, right? Have my stop loss at 139. I want my take profit to be at 145, for example, just to give you an illustration. I can place my order, right? This is going to be different, because if I were to zoom out a little bit, show you, the one on top, the buy stop, is 0.01. This is the lot size. The one at the bottom is a buy limit at 1 lot. Okay, so you need to change your lot size if it doesn't trigger, just like that. All right, Team Octa, if you can answer that question on the deposit, how fast is that? But realistically, I think it might take some time. Realistically, right? Okay. So this is the promo code that you can use. This is to double your deposit bonus. Don't worry about the validity; it's still valid. You can use non-farm 2023 when you deposit. Just use this code. That's going to give you an extra double deposit. So let's say you deposit 100, you're gonna get an extra 100 into it. I don't think you can actually withdraw this 100, but it could help you with in terms of leverage and the margin required to open a trade. Okay, the code again is LonFarm 2023. I'm going to leave it on the screen for a little bit. But if there's any questions regarding what we just discussed about tonight in terms of the order types and how we actually trade the news, what kind of news to look out for, feel free to ask. Okay, I'm not going to be able to answer you if it's whether it's going to be a trading bot that I've never heard of. I don't know what it is, so do your own research, right? And in terms of deposits and account types, Team Okta is going to help out with that. Okay, cool. All right, so any questions? No? Very good. It's going to be a pretty quiet week. I don't think there's actually going to be a lot to trade for news this week. Maybe tomorrow's weekly unemployment claims from the US. Got retail sales on Friday from the UK. But I think the bulk of the events is going to be next week on the 26th for the FOMC, 28th for the Bank of Japan. That's pretty much it in terms of news trading. What I would call important or probably game changing is probably going to be the Bank of Japan, which is on the 28th. Promo code, it's valid. Don't worry about this one here. I believe it's still valid until the end of the year, so you can use the code NonFarm 2023. This is just an old slide that I haven't updated. It was when we did it in May, but this code I've been informed it's still valid, so you can use this code. Still good for 2023. All right, it's NonFarm 2023. Okay. Okay, so yeah, what's next? I believe we should be scheduled for the NFP session again on August. In August, the NFP numbers are gonna get released on the 4th of August. I believe we should have another run on the live NFP session. And in terms of the CPI, I believe it should come out on either the 9th of August or the 10th of August. Just in question, how much can you profit in a day? I don't know. Really depends on your skill, number one. Number two, really on your equity and also on your lot size. So I don't really like counting profits by dollar terms because I can say, look, you know what? I earn 1,000 a day, but I only get 10 pips in terms of my lot size. I just make it a little bit bigger. Of course, that's going to be a bigger risk. So yeah, it varies, but I don't think it's appropriate for me to answer that question. I can give you the estimate on the pip size as actually it will be more than 50 pips a day. Okay. Any questions that we have that's relating to tonight's webinar? No. All right then. We'll wrap up this session. I'll see you next month for the NFP session and the CPI session. We're actually supposed to have a live trading session tonight, but because the schedule got mixed up, so we are having the news trading session today. All right, but thanks for coming in. Good luck with the trades. I think next week is actually going to be pretty hectic, so if you want to review the previous webinars, please do so before next week, because I think the 26th and the 28th, the market's going to be experiencing a lot of volatility in the market. Okay. All right, guys. Have a good one. Stay safe. See you soon.